Okay, in this example, our entity type is a S corporation, which means that is just truly the tax code name. It's an S corp, not a C corp, but an S corp. And we can select how we want to tax it. In this case, they decided to do an S corp, and they are going to have it be a flow through, or like I said before, we also call this pass through. What that means is the bookstore has its own revenue and expenses, but then they get settled out by giving whichever person percentage they get. So in this case, Dominique is 65% and Terrell is 35%. So we'll just split the income that way. So let's take a look at what it looks like. Revenues and expenses. So I've got $1,500,000 in revenue. Expenses are $750,000. So of course you would subtract that, and let's make sure you can see that. You would subtract that number, and that would equal $750,000. That's the income. So yeah, it's basically half. So kind of confusing there, but now we split that. So Dominique is going to get 65% of that number. And so we'll multiply this by 65%. And Terrell is going to get 35%. So here's what it would look like for Dominique. It is $487,500. And for Terrell, it's $262,500. Now in this case, I didn't have any dollars, so I'm looking at the amounts added together that equals $750. But in case I had to round the dollars, I would want to make sure I don't round too little or too less. So make sure that I've got the right amount. Whenever we have an issue with rounding to the dollar, the adjustment always goes to the largest number. So for example, if this one came out and it was $1 and this one came out and it was $1, to adjust it to make it right, I would actually adjust Dominique's. So his would actually go down to what, $4.99, and this one would stay at $5.01. So that's how it would look. All right, but let's not worry about that because these ended up nice and easy, and you guys will have similar problems. Okay, so the revenues and expenses are already done. We took care of those, and you might say, well, wait a minute, why did they put charitable contributions separate? Because charitable contributions cannot be included in a business expense. Yep, that's how it is. We learned that in chapter 6, right? So because of that, this little guy right here, little as in $50,000, this can only be deducted on the Schedule A of each person. So depending on whether or not they even itemize will determine if they even get to this expense, right? This deduction. So $50,000 and 65% is Dominique, and his is a total of $32,500, and Terrell's would be $17,500, and that's the Schedule A. I missed it on the last problem. I'm sorry. Where is our ordinary income again? It's the Schedule E. I just found in giving that last example that your book doesn't show a page 2, but it goes on page 2 of the Schedule E for that ordinary income from partnerships or S corps or flow through entities. So it's page 2. So look that up on the IRS website. We'll see if the newer editions will include it. Okay, I do have capital gains and capital losses. This time I'm not netting them together. I'm going to keep them separate. This problem has me have them keep them separate. Not a big deal. So let's do the losses. 45 or 4,500. It's a loss, so I'm showing it as negative. I'll give 65% to Dominique and 35% to Terrell. Those splits look like this. Make sure that I'm not a dollar off. So $75 here, $25 here. That's good. I'm not going to be a dollar off. These go on the Schedule D. Again, something we learned in Chapter 7, but we didn't do Chapter 7. So I apologize for that. Pretty easy, though. You guys don't have to learn the details of it. You just got to know where they go, right? So capital gains and losses are basically sales of stocks. And so that would be short term is holding it for a shorter period of time, 1 year or less. Long term is longer. Obviously, we can net them together, but there are a lot of rules around that. So if you want to know more, you could always look back at chapter 7. It is in your advanced accounting classes as well. All right, so here's the split for the gains. So we show that as a positive number. Oh, let me show these as negative here. There we go. So we show the gains as a positive number. Again, that goes on the schedule D. Big picture here. This is what I want to make sure we understand in this problem. And then there's another problem I just did a minute ago. That when we have partnerships, S Corps, LLCs, LPs, all that stuff, that when there's multiple people and we've chosen to do, in many cases you choose, but sometimes you're just forced to do a flow through entity, that means that the stuff that we do together, which is in this case, we're doing all of this. As a business, we're doing all of this. We're investing, we've got some charity, we've got our regular revenues and expenses, but all of it doesn't always go on the same form for my individual tax. So on my individual income tax, I am going to take that K1 and it's going to split all of these amounts up. So I'll have a K1 for Dominic and a K1 for Terrell. I'll have each one of these split up so that I can take them to the right schedule on my individual tax return. It's kind of like a W-2. I get it from whoever prepared the tax return for the bookstore. Sometimes it's a different tax preparer. They prepare the tax return. I'll get my K1 and then I'll go do my own tax return wherever I choose to go.